Welcome to Tax Problems Explained, from the perspective of an attorney, a CPA, and a former IRS agent.
Welcome back to Tax Problems Explained from the perspective of an attorney, a CPA, and a former IRS agent with Lawrence T. Ullmann. With decades of experience inside the IRS and in private practice, Lawrence helps individuals and businesses understand how the tax system really works and how to solve serious tax issues. I'm LeAnn Lyon, and today we are talking about what happens after a tax liability is assessed and someone owes back taxes to the IRS. Hello, Lawrence.
Hi, LeAnn.
Lawrence, once a tax liability is assessed and a balance is due, what typically happens first in the IRS collection process?
Normally what starts is what's called a soft collection. The Internal Revenue Service will send out a notice, say, you owe this much money, you have penalties and interest of this amount, please pay, and that's how it starts.
So, how does the IRS notify someone that they owe back taxes? I'm thinking they don't give them a phone call. And then what should they expect to receive?
Well, as I mentioned a moment ago, the starting point is what's called a soft collection effort, which is just that letter. If the deficiency or the delinquency isn't taken care of, then the collection division will start escalating. They'll start with what's called a CP-14 letter, which is a little bit more aggressive. And it'll keep going up until it gets to what's called the CP-504 letter, which says, we have contacted you on a number of occasions, and this liability still exists. If you are not going to pay this, this is a notice of intent that we will levy and file liens. So at that point, it's getting serious. After that CP 504 notice, then you will receive by certified mail a letter that says this is a final notice of intent to levy. And at that point, the IRS will definitely start enforcement proceedings, including levies, filing liens of that nature. So it starts soft, but it gets aggressive, more aggressive as time goes on until the IRS says basically, hey, we've had it. You either take care of this or we're going to levy a bank account or some asset seizure, that sort of thing.
So, if the balance is not paid, how does the IRS collection process begin to escalate?
Well, what'll happen is the delinquency will go normally over to what's called ACS, Automated Collection Services. This is a department within the IRS that has the ability to file liens, to file other notices and what have you, and it can get very serious. If ACS can't resolve the problem, then it can go into the hands of a revenue officer, a local revenue officer, who will have the ability to go out and contact the taxpayer, also to file summonses, to file other notices, levies, and what have you. It can escalate even further than that. If the delinquency is not taken care of, the Internal Revenue Service can contact the Secretary of State, and your passport will have restrictions on it. You won't be able to use your passport. You won't be able to go on a trip. As an example, I had a client come in who was ready to go on a trip to Greece for a relative to a wedding. But she had a delinquency and the passport had a restriction and she didn't know what to do. Well, the only thing we could do is work out some kind of a settlement with the IRS to try to get those restrictions lifted, because without it, she would not be able to leave the country.
Wow. So, what collection tools does the IRS have available if a debt does remain unresolved?
Well, they can file liens. When you file a lien, that puts uh, the lien is basically filed in the county where you have real property. That's going to become a lien on that real property. It's also going to wind up being reported on your credit with your credit bureau. So you're now going to have uh, problems with your credit score being reduced and what have you. Um, as I mentioned, the IRS can seize assets, not only file a levy on a bank account, but if you have a $50,000 car sitting in front of your house, the IRS can, it normally will try not to, but it can seize that asset and sell it. They can even uh, uh, try to foreclose on your principal residence. There's a lot of things the Internal Revenue Service can do. Uh, Hopefully, it never gets to that point because things can be worked out.
Sure. How do interest and penalties continue to affect the total amount over time?
Well, if you have a failure to file, let's say, a tax return, uh, in addition to the amount that you owe on that tax return, there's going to be a failure to file penalty of 5% per month. It goes up to 25%. If you haven't paid a delinquency, there's a failure to pay penalty that equals 5% per month up to 25%. Interest obviously keeps compounding. I've had many cases where a taxpayer has a delinquency, say 3, 4 years old, where the penalties and interest are sometimes 1 or 2 times greater than what the whole delinquency uh, was in the first place. In other words, the penalties and interest exceed what the tax delinquency was. So these things can definitely create problems and get out of hand.
All of this sounds extraordinarily serious, and it is. So, what options are available for someone who cannot pay the full amount immediately?
The first and most important thing is to communicate with the Internal Revenue Service. If a client comes to me and they have a problem, the first thing I'm doing is getting a hold of the IRS saying, we're trying to get this resolved. Uh, Give me, a couple of weeks so I can figure out exactly what's going on. We'll work something out. So communication with the IRS is the first thing. An installment agreement will normally, if it can be worked out, an installment agreement will stop and force collection. In other words, if you can enter into an installment agreement with the IRS that says, I'll pay back X number of dollars per month, and this is all negotiated with the Internal Revenue Service, um, then enforced collection will cease as long as that installment agreement is being uh, uh, paid on. Uh, there's also the possibility of abatement of the tax or penalties. Sometimes a client will come to me with a delinquency where I'll look at it and I'll go, I think the IRS may have overstepped or made a mistake or whatever. So I may try to abate the penalties and possibly even some of the underlying delinquent taxes. Uh, the that's certainly something that can be done. There's an offer and compromise, which is a procedure. It gets very complicated, but where you try to say to the Internal Revenue Service, I owe $100,000. There's no way I'm ever going to be able to pay that. What I am able to scrape together and pay is 40,000 of this 100. Will you accept that and write off the rest? So that's a possibility, but again, very complicated. You really want to have someone professional helping you, and also uh, an offer and compromise is going to extend the statute of limitations on collection. Uh, Finally, there's the possibility of a bankruptcy, but there again is very complicated. Some taxes can be discharged in bankruptcy, some taxes are not able to be. Again, you need to have somebody who is knowledgeable guiding you in any one of these ways you're trying to deal with the delinquency.
So, can you walk us through a general example of someone who owed back taxes and how their situation progressed depending on how they responded?
Well, as I said, if a client comes to me and they owe money, the first thing I'm going to do is contact the Internal Revenue Service. Uh, I'm going to say I see this amount. I'm going to try to get transcripts to see exactly what the computers say happened to try to make sure there's no uh, mistakes that have been made by the IRS. I'm going to be very interested in what the uh, collection expiration date is. Normally, the IRS has 10 years uh, to collect a delinquent tax. If if we're within 4 or 5 months of that 10-year period being up, I'm going to do things much differently than I would do if we had 3 or 4 years on that statute. Because if there's a way of letting uh, the statute of us getting to the statute without the tax being collected, it'll be forgiven. So that's an example of what might happen if a client comes to me.
In fact, I recall talking about that on a previous episode. That was fascinating as well. So, what tends to happen when someone avoids addressing a tax debt for an extended period of time?
Bad things, because the Internal Revenue Service is not just a creditor; it's a super creditor. It has a presumption of correctness that that can be rebutted. I mean, they can be wrong, but I mean, they're presumed to be correct until you are able to show that they're wrong. They have the ability to file liens, to file levies. They can, for example, uh, uh, do a wage garnishment. So every pay period, you'll lose half your or maybe more, maybe less. It depends on the circumstances. But every pay period, you're going to lose uh, receiving your full salary. They can also um, file a notice with Social Security, and your Social Security benefits, or at least a portion of them, can be directed to the IRS. So if you don't resolve the issue, bad things, as I said a moment ago, can definitely and will probably definitely.
Was your client able to go to Greece? Were you able to resolve it in time for her to use her passport?
Yes,
Yay! Excellent.
but it was difficult, and it required a lot of dealing with the IRS. But yes, we were able to resolve it.
Wonderful. Another question is I know a lot of this communication, as you've said many times in other episodes as well, the communication comes through mail. That's not coming through a text message or random phone calls. And I think this is important because there's so much fraud going on in so many ways that people get sucked into sometimes paying things that to organizations that are not the IRS. Is there any way you want to address that?
Certainly. In general, the IRS is not going to call you. It could happen, but normally it's going to happen after they sent you some kind of a notice. There'll be the person's name on the notice and a telephone number. So as a result, you can normally uh, uh, hopefully, if you have that notice, you'll know who it is you're talking to. In general, what I would advise a client to do is if someone calls, it could possibly be a scam, just say, is there a number I can get back to you at? And then I'll get back to you and we can talk later. Then you could call the Internal Revenue Service, say, I received the phone call. This is the number that they gave me and what have you. Is this a scam? That's another way you could deal with it. But you're absolutely right. There are so many people that get called up and they're told, if you don't pay this right away, this will happen or that'll happen, and the people pay. The IRS is never going to call you and make those kinds of threats. That would all be done officially through letters, through notices of intent to levy, things of that nature.
Great points. Thank you. So, as we wrap up today, what factors should someone consider when deciding how to address a tax debt with the IRS?
Well, first of all, you should consider, am I dealing with one delinquency or several? Am I dealing with one tax year or several tax years? Is there a CP 2000 underreporter notice that's already been issued? Where exactly am I as a taxpayer in the collection process? Has there been a levy placed on my bank account, which will basically take the funds out? Has a revenue officer become involved? These are all things that can really become problematic. And as a result, this is where you want to get somebody professional involved.
Well, that is it for today's episode of Tax Problems Explained from the perspective of an attorney, a CPA, and a former IRS agent, all in one. If you're dealing with back taxes and want to better understand your options, you can visit lawrenceullmann.com. And thank you for listening. Be sure to like, subscribe, and leave a review if you found this episode helpful. Thank you, Lawrence.
Thank you, LeAnn. Again, have a nice day, please.
You too.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.